topic is investment properties, pros and cons. I am recording this and going to put this out on my YouTube channel as well. There is a QR code over my shoulder here. You are welcome to click on that. I'll show this again towards the end. If you need my contact info or you want to reach out to me for further questions over what we're going to go over, that is totally fine. There is a Q&A chat. You're welcome to click on that. If you have a question, certainly you're welcome to post it there, and I'll check that every once in a while. But let me just jump right into it. And let me say, this is not meant to cover every possible scenario regarding investment property, but at least to give a high overview of some of the more common questions that I find that I get over the 20 plus years that I've been doing this. And a little bit of my background. My parents are actually realtors. I was raised with a family that owns a real estate firm in the Amarillo area. And my parents owned some rental property of their own. And they also, over the years, basically had their practice had two different facets. One where primarily my father helped people buy and sell real estate, like we think of a traditional realtor doing. And the other side that my mom kind of managed, which was property management. And they had some of their own properties that they managed, but over the years, they began to manage for other people maybe that owned them and lived in Amarillo and just didn't want to manage them, or people that owned a property there and maybe they had moved away or something else. Maybe they inherited a home and they didn't want to sell it just yet, but they wanted to have that rental income. So they were all different situations. In fact, over the years, they actually sold off their property management business a few years ago. And at that time, they managed 145 single-family homes. They do not own all of those. They own a very small number of them. The vast majority, though, being properties that they manage for other people. So I've seen firsthand a lot of these different concepts that I'm going to share with you and things to think about. Investment properties, pros, cons, frequently asked questions. Now, I realize that you probably wondering, why is he talking about primary homes as really his first talking point? And there is a reason for that, because sometimes people decide to take their primary home, that is the home that they live in as their owner-occupied home, and convert it to a rental property. And a lot of times people wonder, can you do that? Is it okay with the mortgage? Do you have to refinance the loan? These are some of the questions that come up. So it can become an investment property, but there's a few guidelines you need to know. The deed of trust, in the deed of trust, there's a section that says that owner-occupied property, that buyer is going to occupy that property within 60 days. It's okay to give a lease back to a seller, that's the person you're buying from, for a length of time, but it can't be longer than 60 days when it's going to be an owner-occupied property, okay? And the deed of trust also says that your intent is to live in this home at least 12 months or more. Now, the key word there is intention. Okay, now let me explain what I mean by that. I have a client, I've done several loans for him over the years. He ended up buying a home in Dallas, and about 4, maybe 5 months after he bought it, his company wanted to relocate him to Denver. He had just bought the home and he loved the home, was very happy with it. Well, he was kind of in a quandary there of what to do. And he talked to me, he talked to his realtor, and he's like, wow, I really don't want to sell it. I just bought it. And he knew, yes, he would take a loss if he did sell it because he had just bought it. There had not been enough time for the loan to go down and the home to appreciate. So what he ended up doing was renting it out. And we discussed, he is totally fine in doing that. He did not do anything illegal or wrong. He did not anticipate that his company was going to relocate him. So if in 6 or 7 months, if Fannie Mae or Freddie Mac or whoever it might be came to him and said, wait a minute, you don't live here anymore. I think you've done some mortgage fraud. He'd be able to say, no. My company relocated me. And so I now live in Denver. And so I decided to rent it out. That's perfectly fine. Nothing was done wrong there. He actually still owns that home, in fact. And he then bought a home in Denver just a couple of years after he moved there. He likes it there. And for the time being, he's going to stay put. Now, let me say, though, that if you bought a property and this is a common area where actually mortgage fraud is monitored very heavily. It's called property fraud. Basically, you're saying you're going to live there, but you actually don't. Well, that can get you in hot water big time. So there are different checkpoints that are done for that. You don't want to get in that path. That's bad news. Okay. But a primary home can become a rental property. And for sure, after you lived in it 12 months, if you want to turn it into a rental property, you've done nothing wrong at all. You do not have to refinance the loan at all. Okay. Why would somebody want to do this? Couple of reasons. Primary home, again, there's primary home, second home, and I'm going to talk that in a minute. We tend to think of this like a lake house, a house in the mountains, but it doesn't have to be. And then investment property. Those are the three primary property types. Well, primary home receives the lowest interest rate options and the lowest down payment options. Okay. Depending on if somebody is a first-time home buyer or if they bought before, they could very easily maybe get in for 3% down or 5% down or a VA loan even less. Okay. So down payment requirements are much, much lower on a primary home and the interest rates are better. So that's why sometimes people do this. There is actually a methodology that is buy a primary home, live in it a couple of years, turn it into a rental property, buy another home for yourself, live in it a couple of years, turn it into a rental property, buy yourself another. And within maybe 7, 10 years, something like that, you could have a little portfolio of 5 or 6 homes that you own. That's totally possible. It's not real common, but it is possible. So something to think about. Primary home and converting it to a rental property. Second home. Well, as I said, we tend to think of this as like a house at the lake, a house in the mountains, a getaway, whatever it is. Yes, that is the most common. But there can be some other situations. I have a client that lives in Dallas and has a second home in Austin. They just happen to go there quite a bit to see their kiddos and some other sporting events they go to. And that's what they chose to do. Okay, that's totally fine. It doesn't have to be on a lake. Here is a definition, though, of a second home. It is defined as a home that you're going to live in at least 14 days of the year, or, this is the key part, or 10% or more of the days that you might rent out the home. Okay. In other words, it's okay to buy a second home and rent it out some, maybe through Airbnb or Vrbo or whatever the mechanisms might be, a short-term rental. That's totally fine. Now, I should put a little asterisk here, assuming that the city or the HOA for that property, if there is one, allows it. You may be aware there have been a lot of regulations and requirements regarding Airbnbs, okay, short-term rentals. So we'll go on the assumption that that's allowed, but that's totally okay to do that as long as you live there at least 14 days of the year or 10% of the number of days you rent it. So just to keep it simple, and I give an example here, if you rented it out on short-term rentals for half of the year, we'll round up a little bit. Half of the year is 183 days. So you would need to live in the home at least 19 days or more. You can't live in it 18.3 days. So I just rounded up to 19. Okay. Then you're totally fine. You haven't done anything wrong. Okay. What is the benefit of this? Pro, con? Well, the pro is you get to enjoy it too. Okay. So yes, it could be for investment property purposes, but it could be for you and your family to enjoy as well. So that is something to consider. You do need a plan for remote management of it, housekeeping. You're probably going to realistically need to hire a company to be able to manage that property for you because there would be different turnover this weekend, that week, whatever it is. Just a little more involved. Now, there are pros and cons to it. I do have a client that bought a very nice home in Colorado. They primarily use it as their second home, but they did decide to rent it out a little bit. And I'll just tell you flat out what happened. They had a guy who tried to rappel off of their balcony. And what happened? The rail broke. And so not a great situation. He was not hurt, but the railing had to get replaced. They had to cancel some rentals that were coming up after that. So you really have to kind of think this through, what that is going to be like. And there may be some things you need to do to the home to allow for it to be more appropriate for a rental. Okay. So there's pros and cons to it. Everybody's got a good and a bad side to it. Something to consider. So second home, to be able to make investment property or get rental income from it. And then we have flat out investment property. This is a property you're going to buy. You have no intentions of living there, and you intend to rent it out right away. Okay. Or very soon. And you're going to do long-term rentals on it. 6-month lease, 1-year lease, 2-year lease, whatever it is. Perfectly fine. You just have to be aware the down payment requirements on investment property are greater. Traditionally and typically, you need to plan for 20% down. So just be prepared for that. And the interest rates are higher. It has nothing to do with you as a borrower. You could have wonderful credit. You could have the best debt ratios. You could have wonderful income. But just purely the property type, being investment property, will mean it's going to have a little bit higher interest rates. Okay, so you just got to factor that in. Happy to discuss that in more detail. Can you realistically manage it? I had a client, I've helped them buy their primary home, and they began to think about doing an investment property. And we talked, and I said, hey, that's great. I'm happy to help you do that. They were both teachers. And I said, hey guys, this is great if that's what you want to do. And by the way, I'm a mortgage lender. I get paid when people do loans. Okay. I said, I just want to throw out kind of a counter thought here. How are you guys going to manage it? Because they were planning to self-manage it. You're both teachers. You're kind of, during the majority of the year, you need to be there by, I think they had to be there by 7:30, and you're pretty much locked up till 4:30. You just don't have a lot of flexibility to come and go. And I said, hey, that's fine. I'm happy to help you. And maybe you can manage that. I just want to, throw that out there. You really need to think through, is it going to work practically for your lifestyle, for your occupation? For some people it will, and some people it won't. Again, everybody's in a different place. No judgment there. Some people will hire outside management, okay? Property manager to take care of it. So that's something to consider. Of course, there is the income potential. By the way, I do have some clients who buy a rental property and it does not generate positive income, at least not yet. That doesn't necessarily mean it's a bad idea. It may mean that they have a little bit of a loss for a while. And then over time, as their loan balance falls further, as the home appreciates, they're able to get a little bit more rent for it. Maybe it'll become positive over time. But maybe the main reason they're doing it is to gain that appreciation over time. That's the difference of what the home is worth versus what you owe. So I've had clients who really income is not their primary objective, but rather that time and that appreciation of the property over time. Just depends on your objectives. The IRS does allow for a very interesting twist on this. They allow you to, quote, depreciate the home on paper, even though the home will typically appreciate. Okay. Now, I should mention, and I'm not going to go down to the road of what a CPA does, but it is important to know that that does mean that when you sell a rental property, you will experience what is called a capital gains event, and you would have to pay some taxes when that property is sold. It's very difficult to tell you exactly what that would be. It would depend on what you paid for it, how much you made, a lot of different factors, and what your tax bracket is. But it is something to just be aware of. Okay, so that equity growth. So again, investment property may be something you want to consider. Now, by the way, as a mortgage lender, we represent the traditional residential properties. Okay, the contract that is actually used is called the 1-to-4 family contract. What does that mean? That means it's a 1 unit, meaning it's just a standard single family home, 1, 2, 4 TO. So it could be a duplex, a triplex, a quadplex. Okay, anything over that 4 units Well, you're really then kind of into a commercial property, might be an apartment complex, totally different realm of lending than what we do. Okay. I can make connections for you in that realm. There are not many of those properties out there, but they are out there to some degree. And so it is a different level of financing. What I'm discussing here is 1 to 4 families. So duplex, triplex, quadplex, or single family. Now, types of investment property. This is a topic that a lot of people are surprised when I bring this up, but I find that clients really find it very beneficial when we talk about it. They don't know it's coming. They don't usually ask for it. I just share it as some additional value add for them. It's not uncommon that I will have people call me. Maybe they're just thinking about it and they say, hey, I think I want to buy a duplex or a triplex. And usually here's their rationale. By the way, it's good logic. They're like, I like the idea of buying a duplex, quadplex, or whatever it is, because what are the odds that both sides or all 4 units are going to be vacant all at the same time? I'll admit, not very likely. It could happen, but it certainly reduces the odds. So it's nice to think you could own it. You could have, if it was a duplex, both sides rented. If this tenant moves out, you've still got income from the other side while you're getting the other side re-leased, re-rented. Okay. And that does help with cash flow. I totally get it. That makes sense. So from an income position, it's a brilliant idea. Okay. I'll talk about condos and townhomes in a moment because those are typically 1-unit properties. But here's the thing that I think a lot of people don't think about and that I share with them is, so from an income standpoint, I cannot argue that statement. That is very valid. However, let's say you own the property for 5 years, 10 years, whatever, and you decide, you know what, some things have changed. I don't want to own it anymore. I want to sell it. I want to liquidate it. You want to get your cash back. Okay, great. Get that equity position. Well, you have to realize who is the most likely buyer of a duplex, triplex. It says triples. I just realized that. Triplex or a quadplex. The most common buyer is another investor. Okay. There are just simply not as many of these properties out there as there are single family homes. So your pool of buyers is much smaller. Okay. Not everybody wants to buy a duplex and live in one side and rent out the other. There are some that do, but it's definitely a much smaller segment of the market. Okay. Well, you got to realize that when it comes time to sell it. So what is usually an investor looking for? A deal. I mean, that's fine. Nothing wrong with that. But you just got to realize you don't have the same market effects, market impact that a single family home would have. So it may not work out as well upon resale. It might. And certainly there are different properties. Maybe it's near a college. Okay, yeah, that's a little different situation. I can understand that. But in general, it's just a different market. Whereas a single family home, you have a broad array of buyers. You have buyers that might want to buy it as a rental property. You have single people. You have married people without kids, married people with kids. You have people that want to owner occupy it. You really have a much broader array of the market. Okay. The other thing to consider, so that's at resale, is who is your most likely tenant? Okay. The tenant that you're most likely to see. Well, there are certainly exceptions to this. So I am making a blanket statement. But many times, if you went and looked at a lot of duplexes, triplexes, and quadplexes, the average one might be about the same size as an apartment. Okay. There are definitely exceptions. But in general, a lot of times, the person that would rent a quadplex or a triplex might just as easily take an apartment. So your competition for tenants may also include apartments. It may not. Depends on the very specific nature of that property, but that is something to consider. Who are you competing in the marketplace for those tenants? Okay. Just something to be super aware of and really think it through about who's the most likely tenant that's going to rent this. I did have a client that bought a duplex, and what they basically figured out was their most likely tenant would rent an apartment, but the reason they were attracted to his duplex was because of the side yard. Most duplexes are side by side with a small side yard around it. And why did those tenants want that side yard? Because they have pets. Now, there's nothing wrong with pets. I have a dog. I love my dog. She's awesome. But that may or may not be the best tenant for you. Now, you could obviously take care of that with a really good security deposit, pet deposit, etc. But still, you just got to be prepared for that. So be aware of who you're renting to. Condos and townhomes. Okay. Oh, let me back up. One thing, the single family. Many times, most single families, let's say it's a traditional 3-bedroom, 2-bath, 2-car garage. That is something that is often very difficult for a tenant to get in an apartment situation. So a lot of times you're renting them something with a single family that can be harder for them to find elsewhere. Okay. Condos and townhomes. By the way, the townhome is seen much more like a single family. There may be HOA dues, probably will be, but from the lending perspective, it is seen much like a single family home. But a condo is very, very different. When you buy a condo, yes, you're buying that unit, but you are buying into that HOA association. It is much more entrenched with a condo. With a townhome, you actually own the land underneath it. You'll have a survey for a townhome. With a condo, you will not. Okay. And sometimes that's super obvious. You're like, well, what if it was a 5-story condo and I bought on the 3rd floor? Well, of course you don't own the land underneath it because there's another unit below you. Okay. But there are some that are a little deceptive, that it may actually be a condo, but it might be in name a townhome. I've seen this. Okay. That the name of it is such and such avenue townhomes, but looking in the legal description, it's actually a condo. Okay. Now, why is that important? There is a concept of, and this is a much deeper issue, and I won't go into all the details here, but if you were to buy it, number one is we have to determine, is it a warrantable condo or not? But number two is it may become non-warrantable in the time you own it. Okay. Now I have a whole other video about warrantable and non-warrantable. That's a whole separate issue. I won't go into all the details right now, but you got to be aware that when you buy a condo, there can be some things that could happen to that condo that are totally outside of your control, that are more controlled by the HOA, the management of the HOA, and the other buyers in that complex. Okay. So there's a little more risk with a condo. It may be fine, but you really got to be careful with that. The reason I bring that up is a lot of times when people are kind of exploring, thinking about getting into investment property, they're often looking for less expensive properties. And I will admit, condos kind of fall into that bucket oftentimes. Not always, but sometimes. So just got to be aware of that when it comes to condos. So the main reason for this video is just to give you a flavor of investment properties. It may be a wonderful investment for you. It may be something that you want to do. Maybe you're going to buy a property. Maybe you're going to have a kiddo live in a property for a while, maybe at college, and then you'll rent it out some. Sometimes there's a season where it really makes sense, and it's a really great idea. I am happy to discuss this with you or you and your spouse, you and your partner. If you just have wanted to think about it through, there's other common questions that we get about, hey, should we buy in the name of an LLC? And we talk about that. So I am happy to discuss this or any other related topics. Again, you'll see my QR code here. And then also over here, this QR code, if you want to schedule a time to talk, you can click on that and just block a time on my calendar that works well for you. I'm happy to discuss this or anything else. Hey, let me just see here. Okay, we've covered that question. Thank you. About condos. Let me cover two little sidebar issues. There is something in the news right now that is going on. Let me turn off this share. About institutional investors buying large numbers of properties. This is an interesting topic. I will tell you on the national basis, it is a very, very small percentage of homes that are owned by institutional investors or hedge funds. Sometimes it is a very small on the national basis. There are some areas of Dallas where this has been a little more pronounced. I wouldn't say it's rampant, but it is something to be aware of. There is different legislation. We'll see where that goes. There's been some different things in Florida done on this, and we'll see. But really, I'm talking here, institutional investors, by the way, are those that own many, many units. An institutional investor actually is defined as somebody that owns, or a company that owns 1,000 or more single-family homes. Okay, very different. Now, some people hear that and they go, "Whoa, that's bad." They could, and they may pay cash for them, and competing for them. A lot of those may be though in areas where, say, near a college, where there are students that may rent a home near the college, and maybe it's a single family home, but it's really not a typical neighborhood with a elementary school that kids are going to and things like that. So there's more unique situations to that. I'm happy to share more about that. It's a little more pronounced in the Dallas area, but nationwide, it's not really as big. There is has been some big misinformation about that on a national basis, but I have had some situations with that with clients when they were selling a home or buying a home, competing with institutional investors. I'm happy to talk about that more. Let's see. I think we've really hit the main topics. Hey, if I can answer any questions, let me know. Harold Smith, Legacy Mutual Mortgage. Have a great day. Bye.